So today we are looking at my M1 Finance portfolio and we're going to break some things down. It's actually been a little bit of a time gap between the last time I shared. So my number on my current value of my portfolio has ballooned. You can see here our current value is $180,547, which has been fantastic. That is in our current all-time. You can see our gains are almost 38,000. Earned dividends is 2,673. And before you comment down below why this is called Dividend Dennis and my dividends are minuscule in comparison to where they could be, is because I'm actually really focused on dividends long term, not today, because I really don't have the need to pay the taxes on all the dividends. So the goal is one of two things: either have the dividends increase over time by the time I need them, which is in about 14 years in this portfolio, or I can sell off some of these companies and buy into nice paying dividends at that time. So let's break a little bit of this down. So if we go to our year to date here in 2023, you can see we've had some really amazing gains. Obviously, 2022 was a huge hit for a lot of people in their portfolio. So if we actually go back to our all-time here, did I go to all-time? So let's go to our all-time. You can see here, where is it, 2022? So it was relatively flat in her portfolio. I was like burping here. In her portfolio for a long time. And what's really tough about that is investing while your portfolio is down and the stock market is down is a really tough thing. And I get that. And it's really tough. And the reason I wanted to show this, even though this was relatively flat, what ended up happening was I would deposit like $500 that week. And then that week's portfolio performance would go down $500. So it felt like everything stayed flat the entire year. I'll even go to my funding history. So that way you can see here, 2022, we put in $57,011. Now I understand that seems like a lot, and for some people that is not as feasible for where they're at this time. But I do want to show you one thing. The first year I started this portfolio, I put in $1,000 into the portfolio. The second year, if you actually minus that $5,000, it was close to about $9,000 in the portfolio. And yes, in 2021, I did put quite a bit more. But again, if you take out the withdrawals, that was because I did some margin loans as well too for actually different things outside of my portfolio. That was closer to $42,000. So 2022 was actually the largest year that I have so far as putting money in. And in 2023, I'm currently at $32,000. So the reason I want to show that is because I did start this portfolio at a small amount, and that gave me a lot more confidence, not more confidence, it just gave me confidence as I was going through and actually investing this money. Because one thing I got to tell you is if I was given $20,000 day one, I don't think I would be able to invest it all at once. I definitely needed that experience over time to understand how I wanted my portfolio. Like this whole account here in general on my M1 Finance account looks quite different than my original account. So I have all my slices here. I have stocks inside of them. We can break this down a little bit more and see where we're at. So as we continue this, if you are interested in checking out M1 Finance, I'll have a link for you in the show notes down below, as well as if you're somebody who wants to set up a retirement account and actually utilize M1, I have a full course on setting you up from A to Z essentially on setting up your retirement account. I actually call it Set and Forget Retirement, which will help you with your overall retirement, and then you can set it aside and not think about it twice. If you want to check that out, I'll also have a link down below with a nice discount code called YouTube, so you can get $100 off of that course. Now, let's talk about some things when it comes to this portfolio. So first and foremost, we're in our all-time. Here you can see we have a growth portfolio, finance, retail, tech, real estate, and then it says industries and energy. There's actually only one stock in there. Now, for me, all of these are currently in the green, which is fantastic. You can see our real estate is the lowest performing one right now. And our current highest performing slice right over here is with our growth. Actually, no, it's not. Whoa. Let me go back. It's actually our tech. Our tech has been the best growth as a whole overall. So let's start into this little slice here. So in here, we own Microsoft and Apple. I don't want to say boring stocks because they're definitely not boring, but I know most people do have these and house these. So we're just going to kind of look them over for a quick moment here. You can see Total gains is about $9,000, almost $200, almost $400 in earned dividends, which is very nice, especially for companies that pay small percentages in comparison to, like a 4% payout. These companies, I believe, are both under 1% or a little around that 1% payout. So yeah, Microsoft is at 0.81% when it comes to dividend yield. So you can see here we have about 51 shares, average is $244. So for me, it was definitely investing during that time again in 2022 where things were staying relatively flat. That's where I was building a lot of that. And then going obviously with Apple, very similar thing as well too. I actually haven't been investing as of this recording as much into those stocks because they are at their 52-week highs. Not saying I can't be investing in a company that is close to its 52-week high, but if the overall value is not worth it for me to continue investing in them versus other stocks in my portfolio, that tends to be where I go. So next up here is going to be with our growth. So you can see in our growth, we have Google, Amazon, Meta, and Tesla. And what I love most is when Meta was actually down in like that $100 range, which I thought was insane. And of course, looking back at it, you're like, oh, I wish I could have invested more. So for me, I was definitely investing pretty heavily. Got my average share price down to 146. And you can see here we have close to 60 shares. I actually had a little bit more than 60 shares, sold off a tiny bit of it as it was hitting that peak, and then at the time it was the peak, and then using that to fund other stocks as well too. So that was really nice. I don't typically buy and try to sell quickly. I'm not somebody who's trying to like day trade in any capacity. So for me, it was really just, hey, this was starting to get to a point where it seemed valuable to kind of peel a little bit off the top and then use that for other funds that were a little bit under their averages, and if I saw some potential still for them to come back. You can see here Google and Amazon also as well too have some really nice returns. With Google, I'm at $107 average price point, which is nice. And then we go to our current section right over here, where as of this recording, this is actually currently right now the section that has actually been taking the largest hits over the last couple of weeks. So we have like Discover right now, which has taken a huge dive, dropped down to $92. Actually, it dropped down to like the mid to high 80s. So my average price has been $92.08. I've actually paused on investing more into Discover once they got closer to like 112, 115. So as they've been dropping with everything that's been going on with Discover, obviously you can read all the things about it. I still believe the company is going to do well long term. So I've been investing fairly heavily over the last few weeks. So if I go to my activities feed, so like an example, the most recent purchase, I did $325 towards them. You could see right over here, bought about 3.5 shares of the company. And then the week before that, or the last purchase before that, 165. And I think I did a large one here on the 25th. I did about $800 at an $89 price point, which bought me almost 9 shares of the company. So the way I usually do this is by going onto Seeking Alpha. I have my overall portfolio there, and I can see which companies are hitting their 52-week lows or on the lower half of their 52-week average, or 52 weeks. And what I'll do is I'll look at the fundamentals, see if everything is looking good, if, what's causing them to drop, CEOs leaving, things going on in the company, data breaches, any of those kind of things. If it's something that's fundamental to the company, I definitely have to consider if I want to keep investing. And if it's something where it might just be a short-term downturn, it's just an opportunity for me to buy. I was listening to somebody else say this once before. It's interesting that the stock market is the only kind of place where people do not like a discount. And I thought that was really interesting, right? So when we go into, Best Buy or Target or go on Amazon and we see a discount, like we get excited, especially if it's something we've already wanted and it goes down in price. We get so excited for that. And then when it's a stock and we love that stock and we see the opportunities for that stock and it keeps going up, it normally keeps going up, and we see it going down for a while, for some reason, most people do not want to invest anymore into that company. And so for me, I always find that very interesting. So I'm going to actually just show you with Meta. So as of right now, like I told you, I did a little bit of selling from Meta when it was getting close to the top there. But I wanted to show like when it was getting down to 112 or what was the 114, there was a couple times when it was under $100, like right over here on October 27th. I put in $400 because I was like, this to me seems like a crazy deal. I mean, obviously at this point we know that for sure because it's currently at, what's it at currently? Almost $300, right? So right there, that is a huge increase from where I bought this to where it is at this point in a relatively short amount of time, right? I bought this in October of 2022 and it's about September of 23 right now. So in less than a year, it went from purchasing at 100 to it, currently at about $300 in value. And so the way I kind of see that is that was to me a company that I saw the fundamentals, I listened to their quarterly meetings, I understand where they're going and what their intentions are, and I still saw that as a company I wanted to stay invested in because I was already invested for a couple of years at this point, and I just saw that as a huge sale for me to just dive in. And again, I wish, just like anybody else would, oh man, I would have bought more if I had known for sure. But since I didn't, I was averaging in. You could see 400 on the 27th, $100 on Halloween, 150 on October or November 3rd, and so on and so forth, and buying in increments that were capable for me. So if you're somebody who's like, oh, I can't do 400, but I can do 40, sweet, toss in that 40. Toss in that 10, toss in 100, whatever works for you. If you feel like that is a company that is going to work for your goals long term, they're in a space that works for you. You are paying attention to their business, what's going on, what's causing that drop. Because it's a little easier when the overall market's dropping, right? Obviously in 2022, the whole market was dropping, but Meta was dropping significantly more than everybody else. And so I had to make sure that this wasn't going to be something that I was buying now and, it was going to stay flat for, years and years to come, because that wouldn't be ideal for me. Or it could still be ideal for me because since I'm waiting for another 14 years, it wouldn't matter. If Meta stayed at $100 for another 2 years and then came to that $300 price point, that would have been fantastic. I would have bought in so much more of Meta by that point that it would have been so worth it for me. But it might not have been for you, which is why so many people always had to say it on on YouTube. I was saying Facebook so much. On YouTube, to not follow their investing style because it's so different for every person. I'm investing for 14 years, so my decisions on what I'm investing in might be so different than what you're investing in. And so that's what makes such a big difference in styles and risk tolerance and everything else as well too. So let me go into our holdings here just to kind of see everything as a whole. So obviously we saw Meta, we're up about a little over 100%. Apple, we're up about 46. SoFi, if you are a SoFi fan, I've actually been working with the company since 2019. So when they came out on the market, it was great. And really happy that I was able to get an average price point. It's actually a little bit lower than this, but I kept buying even as they're going up in price because I still see so much potential. We're actually still up about $43 with them. Microsoft, we looked at earlier, about 34%. Tesla, we're up about 31%. Google, 27%. Ross is an interesting one. I'm currently up about 23%. Still debating on if they're getting to a point where their price is a little too rich for where their performance is at. So really debating if this is one I want to be holding. You can see right over here, Costco, we're up about 20%. Amazon, we're actually getting up close to 18%. I was able to get to Amazon $117 a share, which is really nice. You can see Home Depot here, we're up about 11%. Now, these percentages here, most of them we already looked over, don't include dividends, one, because they don't pay them. But then here with Home Depot, this does not include the dividends that have been paid out. If I look at them from the other end, so you can see here again, it's almost 1,300. If I go into, this end of M1 Finance, you can see here a total of almost $1,800. So that $1,295 in gains, but exactly $473.67 in earned dividends, which means either this has been paid out or it's about to get paid out, but I've already owned the shares beyond the time frame to be able to get paid out. So for me, I love seeing this on this end as well too, not just from the the market gains portion of this as well. So to me, this is one thing I really love with M1 Finance. I get to see them on both ends, really see the overall gains as a whole for me and where I'm at with my investment. So if I go back here, see Ally I've been buying quite a bit of lately because it has been taking a nice dip. So we have about 300 shares at $28.62 a share, up about only a dollar, 1.13%. But again, if I go over to the actual sector over here, we've gotten paid out $278 in dividends. So we're actually in total up about $375 in Ally Bank. So I'm really excited. I see a little bit more risk with this one in comparison to something like Discover, especially with the market and it having a lot of car loans on its books. And obviously car prices are looking more and more likely to keep going down. So that's obviously some risk there as well too. But this is a risk that I'm willing to bet on because it's $8,588 that I put in the total of my portfolio, which is $180,000. So that's how I can kind of diversify and take some different risks on where I want to put my money. And then let's go back here. So we got Discover. You can see there we're at 95 shares. We're actually still down 0.03, but then when you account for the dividends, we're actually in the positive for that one. Airbnb here at 73 shares. We're actually down just a tiny bit here. This one I'm actually getting close to about $10,000 that I've invested in, and I feel like that's going to be where I stick with for some time. So I've been investing in this one as it was dropping around $100, $115. It was kind of in that zone for some time, so I was investing into that. I actually have an Airbnb myself that I have for about a year and a half now, actually almost 2 years, and I love it. And I think some days I love it. I should preface with that. Some days I love it, other days I don't love it as much. And I also see the opportunities for this company to be able to continue to grow, continue to have impact in its free cash flow, and then possibly even start paying out a dividend in the future as well too, which would be fantastic, or doing even more buybacks so that I can have more ownership in the company without having to buy more shares of the company. Then here you can see we have Texas Instrument. Right over here, we're actually only down about 2%. This is a company that I have been debating on holding for a little bit longer and possibly getting rid of. After its dividends, I believe I'm actually in the positive with this company. So if we go back in here, in my all-time, let me click on here. So in my all-time, I'm actually up almost $100 because I've made about $200 in dividends, even with it being down about $110 as a whole. So just really debating on if this is one that I want to keep holding. Their cash flow this last quarter did not come in well, and so we get to kind of pay attention, and we'll see what the next quarter provides and if they see opportunity to continue to grow back that free cash flow. That'll be very important. And then that last one you saw was Square. So Square right now, I have 92 shares at $85 a pop. You can see this one is actually the worst performing by far, as the next one after that was Texas Instrument at close to 2%. So this one is down about 32% here, which is about $2,500. And really debating on keeping this company in this portfolio anymore, possibly even selling it for its loss or waiting for it to bounce back a little bit, because I've seen it kind of have some really large spikes in increase. And obviously there's that risk. If I keep holding it, maybe it keeps going down and doesn't recover. And part of the reason getting rid of Square, or technically it's called Block, getting rid of Square is the compensation, the stock-based compensation for this company has been pretty ridiculous over the last couple of quarters, to the point where their free cash flow would just be like wiped out entirely. And so for me, I just don't see the value in holding onto a company that keeps paying out so much in free cash flow, in stock-based compensation, that it's diluting my ownership of the company for the long term. And I have bought in a little bit of it as it's dipped under $55, or I think for sure under $60. I've been buying a little bit here and there to kind of lower my average. And obviously that's a risk that I'm taking in that regard. So we'll see how this plays out. And I also feel like for the long term, I'm not really in with this company as much as I see opportunities even more so in like Discover at the moment, SoFi still, even with it being around close to $9, I still see it as a great price point. You can see here we have almost 2,000 shares in the company as well. So it really just depends on where I see Square and if I want to keep holding on to that. I also keep track of how much I earn in dividends. Let me see if I can bring that up for you really quick here to show you. So I'm having my face here, cuts down on editing, because then I don't have to keep jumping back and forth. So let me jump right over here. So this last month, I've actually earned in August $136.55. Again, the dividends are not that important to me right now, but I am keeping track of them. I am seeing them grow. The companies that are paying out, I'm just reinvesting into my portfolio as a whole. So it's not really going back to the company that paid out the dividend, because to me, it doesn't really matter. It matters more going into the stocks that have the best opportunity. So you could see so far in the 8 months of the year, we're averaging so close to $100 a month, which is fantastic. Total payout of about $2,441 as a whole, and just excited to see where this keeps going. And for me, I do have this available if you are interested in checking it out. I do have that in the link down below for you, so you can go ahead and check that out. You just toss in your email and then I'll go ahead and send that to you. You'll be part of my email list. I send an email out like once a month usually, and it's either around investing, retirement, or just like money information as well too. So not only do you get a free dividend tracker, you can actually get just really cool information and up-to-date content as well. Now, I mentioned that this portfolio is one where I am going to be using in about 14 years or so, give or take. And so if you're interested to see how much you need to invest to live off of your dividends, check out my video right over here to learn all about that.